afternoon, everybody. Everybody feeling comfortable, sufficiently hot, I'm hoping. I'm super excited about this. We're going to keep it as casual and as flowing as you can when the question is whether or not European legislation gives Europe a competitive advantage when it comes to blockchain. You've already heard who our participants in this conversation are, but I'll let them introduce themselves a little bit and give you their first cut on what they think, whether or not we are actually seeing a competitive advantage. Peter, I'm going to put you on the spot as the first person. This is all your fault, right? Or rather, the other way around, this is all thanks to you. The European Commission coming out with something on MiCA. We're seeing international associations and others. We've already heard today that one of the speakers would give a limb to get the problems that we have here in Europe, which means I've taken that on the side of a positive thing. So do we have a competitive advantage when it comes to blockchain?
Well, I'm going to give a lawyerish answer to that, and I'm not a lawyer. It depends. If competitiveness and competition advantage means that we have more entrepreneurship, more risk-taking, more capital flowing into the space, then I would say definitely not. We don't have an advantage. If it's a matter of engineering and technical capability and prowess, I would say we're no better but no worse than anyone else. So we don't have an advantage, we don't have a disadvantage here. If competitiveness is driven by regulatory framework, which I think is a very big if, and I actually personally doubt that a bit, then we do have an edge and an advantage, because the MiCA framework, for all its defects, and it has many, does provide legal certainty, provides a framework under which this community can develop without having to fear constant legal action against them, because what they're doing is the devil's work or is illegal, is just a scam. So we believe that blockchain and crypto assets have enormous potential, tokenization have enormous potential for the economy, and MiCA is our contribution, our first start to framing this environment. And so if competitiveness is driven in part or largely by regulatory framework, I say yes, we have an advantage. But if regulation doesn't really matter, then really I think the competitiveness depends on where we see the implementation, where we see the risk-taking, where we see the capital going into the space. And that is a little bit in Europe, but mostly it is out of Europe.
Okay, so legislation is a competitive factor. I'm putting you down on the yes, maybe. Okay, yes, yes, maybe is good enough for me. Beata, looking at it from an internationally operating CASP, you know the US space very well, you know a lot of jurisdictions very well. How does it look like? Do you see us having, Peter's point about predictability, none of us doing the devil's work, or at least having a stamp that says that we have a safe space where we're not doing the devil's work?
Yeah, thank you very much. So I would actually echo what Peter was saying. For us, we are a global, diversified digital asset business. So for us, legal certainty is definitely paramount. What does a legal certainty do to us? It gives us the ability to really invest in a region and commit in a region. So I mentioned we are a global business, but actually a third of our workforce is located here in Europe. Europe is a very important jurisdiction for us. And MiCA, you know, you mentioned all its flaws, it does give us that legal certainty that we needed. But it's just really a part of the story, right? Because digital asset business is so global, we need the rest of the jurisdictions around the world to kind of also, let's say, do their part. Because being regulated, being sensibly regulated in one region solves some of our issues and problems, but I think we need some kind of global consistency of these rules. And for that, actually, we're very grateful to the European Commission and Europe to really set the stage and kick us off in that direction.
We are going to come back to the big question of yesterday later, but I wanted to maybe not have the whole panel be about the US. But Patrick, if I turn to you, the circle perspective on that, looking at Europe, again, maybe looking at digital assets regulation as almost like a proxy for blockchain as a whole. How does that look like from your perspective? Is it making things more attractive? Is it worth it?
Yeah, I think on paper, I think MiCA definitely gives Europe a competitive advantage. I mean, it has been mentioned before, we have a clear regulatory framework, we have a harmonized framework across 27 countries, plus the 3 EEA countries, so across 30 countries. A framework that covers comprehensively crypto assets, stablecoins, the issuance, the service provision, market abuse rules, etc. So I think on paper, for sure. In practice, it's a bit too early to tell. And Peter mentioned it, we'll have to wait at least for another 48 months, 2 or 3 years, in order to get some of the data we need. Right now, Europe is definitely lagging in terms of capital and in terms of innovation in the crypto space. If you look at all those indices, Chainalysis and others, I think there's not a single European country in the top 20 Chainalysis crypto geographical report. I think there are some promising statements from global crypto firms that they might allocate more capital, more resources to Europe. There's some promising figures also on VC capital distribution in Europe, but it's way too early to tell. So let's wait for how those rules can be implemented in practice. And for stablecoins specifically, and I think that has been mentioned quite a few times already today, I think the stablecoin part is by far the most challenging for the industry. And the asset referenced category is, I think, one that is quite obvious for everyone to look at, that was political in nature only. And at least from an industry perspective, I don't see any project coming up and popping up and being regulated as an IRT in the near-term future. And from an EMT, so an e-money tokens perspective, so the second stablecoin category in MiCA, I think there are many open questions and challenges that need to be tackled in the next 1 or 2 years. And I'm sure we'll dig deeper into that.
We will, for sure. So, Jörn-Jakob, I know that we've been talking a lot about that. We've been talking about the digital assets, but you can also use blockchain for other things. How does that look like? I know your members are some of the most innovative in this space. No offense meant to anybody, but it's very impressive, some of the things that they're looking at applying blockchain for.
Yeah, no, thanks for that, and thanks for having me here. Just in terms of setting the stage, I mean, Europe has, I think, a vibrant sector on sort of blockchain and crypto, but a lot of it are still sort of small and medium-sized companies, taking the EU definition. So if we now look at the regulatory framework and whether that sort of brings Europe a competitive advantage, I echo the comments of my co-panelists. That still depends, and there are a number of reasons for that. I mean, first of all, as said in an earlier panel, MiCA, yes, it has been sort of adopted, but it's not the end, it's rather the beginning, because the proof in the pudding will lie in sort of the application and also a lot of the level 2 measures. And as Patrick pointed out, some of these can be quite challenging for some of the sectors, particularly the stable coins. I mean, one of our members is Tether. So in terms of circulation limits, and as said, I think we're going into that a bit later probably in the discussion. The MiCA rules can be quite challenging. The second aspect, going back again to a lot of smaller companies, yes, MiCA is great in terms of providing a regulatory framework. It's probably relatively easy to comply with by some of the bigger companies, but challenge might be for some of the smaller companies. A lot of European companies only have like 10 or 20 employees, and sort of then doing the whole process of authentication of seeking authorization can be very challenging. In terms of future prospects, I think what is also important is that Europe does recognize the potential of blockchain technology, and sort of going back to your question there, some of our members, for instance, working on a zero-knowledge proof, authentication tool or technology that allows sort of the transfer of data without actually sharing any sensitive personal data, but still allowing verification and identification. So these tools, or these could be very useful tools in the context of the AML discussions, but also the EID discussions. I'm happy to go into that later.
So that's actually a really interesting point in that sense. So everybody thinks that European legislation is a really good idea, So, but Peter, some of it was solved in MiCA and some of it was solved outside of MiCA in transfer of funds. Like, was that really necessary to make us all work so hard on a lot of different pieces of legislation? Why not put all of it into the same?
Well, it was necessary to do it that way because the EU likes complexity. We have to do things complex. Now, joking apart, is that AML rules apply across the board. So if you are a financial entity of whatever nature, you are an obliged entity under the AML rules. So that's why MiCA does not contain substantive rules on anti-money laundering. All it says is it defines who are crypto asset service providers, and the AML rules will say, just say, if you are a CASP under MiCA, you're also covered by AML rules. So that's why it's separate. The transfer of funds regulation is a very specific piece of legislation about the information accompanying the transfer of funds, which is now extended to crypto assets. And that really came later than the drafting of MiCA. So it was adopted almost at the same time, but when we drafted MiCA, the substance of the transfer of funds rule, what became the transfer of funds rules, wasn't available yet. So could we have integrated it into MiCA? Yes, but it would have complicated MiCA a great deal, and so now it's kept sort of separate. But as we like to say in the Commission, the two pieces are fully consistent. And people who know me very well know that if I stress that something is consistent, that always justifies that you have a closer look.
So I'm going to take the bait. Beata, would you say that they are consistent looking at it from where you're sitting? And how does it fit with, so anti-money laundering is something that we've got global regulation on. We've got standards, we've got predictability, we've got a long experience in traditional finance with that. And then we've got this extra thing here. Are they consistent?
Yeah. Well, I think actually it's not too bad between MiCA and transfer of fund regulation piece. But obviously, because as Peter said, the EU likes complexity, there's always another legal instrument that can change the scope and add a bit of a detail and things like that, right? And so now we have, in addition to the transfer of fund regulation, which is now closed and done and dusted, we have this AML package. So it's a generic AML package. And that seems to also now creep into the crypto space, and that one is still open, and whether that will remain consistent with the other pieces mentioned, so MiCA and transfer of funds, and thereby also with the international standard, that's really that we have some questions there, and I think we're hopeful, but I think it remains to be seen, and we'll see.
Peter, that was for you. We're putting our faith in you here, huh?
Well, we'll see. But I think that anyone who looks at this will observe that MiCA's intention is very much to enable the blockchain ecosystem. It's a starting point, it's from finance perspective, but it's enabling. Whereas if you look at the underlying rules governing anti-money laundering, as they emanate from the FATF, the Financial Action Task Force, there seems to be an underlying idea that all of this crypto is one big money laundering conspiracy, and therefore we should close it down. I don't share that view.
I'm
yes,
happy to hear it.
Cryptos are used for illicit purposes. Yes, that takes place. But if you look at the data, and if you look at general data about how much of the economy is illicit, and people say, well, up to 5, sometimes 8% of the overall economy is illicit activity of all kinds of natures. If you then look into the numbers on crypto, we see Chainalysis, TRM, and the likes quoting figures of between 1 and 2% illicit. So that suggests that the crypto ecosystem is actually less prone to illicit activity than the rest of the economy and the banking system, which is to many an inconvenient truth, but it's not because it's inconvenient that it isn't true.
Okay. Patrick, I'm gonna turn to you and come back to the. I'm gonna have to think about that one, Peter, about inconvenient truths. You mentioned an inconvenient truth or an inconvenient circumstance around stablecoins and the way that Europe goes about that. Is that something you can elaborate a little bit on? Because I think you guys have a very specific and very interesting perspective on this.
Sure, happy to. I mean, let me preface that by saying that obviously the regulatory clarity is a great step forward, but there are indeed, as mentioned, a couple of quite challenging questions we have to tackle. And let me maybe share two general challenges and then two specific aspects in MiCA. So as general challenges, MiCA really tried to propose a new dedicated frameworks for assets that are not financial instruments according to existing EU law. And as such, MiCA provides new rules for new types of assets, for almost all kinds of assets. So whenever you are deemed a security as an asset, as a crypto asset, you won't be in the scope of MiCA. But there's one sector where that basically, where that principle is broken, because for e-money tokens, you will be seen as both a crypto asset, but at the same time also as e-money, according to existing e-money rules. And that, if you take that concept further, that proves to be very challenging, because you will have to follow e-money rules and crypto asset rules at the same time. So that's a general principle that is very challenging to implement in practice. Another challenging principle for global stablecoins, so stablecoins that are issued primarily in the US and elsewhere, is the fact that MiCA doesn't provide a pathway for a global stablecoin to subject the local activity and the local issuance under MiCA rules. MiCA always requires essentially the entire operation of the entire stablecoin to comply with those rules. So, and so the big question is, how can you make sure that for global stablecoins, those MiCA rules will be compatible with other global stablecoin rules that will pop up around the world in the US and the UK and Singapore and elsewhere. So that's another general principle. And just to round that up, for the crypto policy nerds in this room, and I'm sure there are quite a few here today, two specific challenges. I mean, the 30% of e-money token reserves that have to be held with EU authorized credit institutions. That's obviously something that, especially under the perspective of what happened in the last couple of months with the recent bank failures in the US and elsewhere, is something that could prove to be a systemic risk for e-money token issuers and stablecoin issuers. So I think that's a specific provision in the MiCA text that we will have to work through. And the second one is MiCA requires quite extensive capital buffers, so 2% for normal stablecoin issuers, 3% for significant stablecoin issuers. Although at the end of the day, there is no lending business happening in the background. There is no hypothecation of the reserve assets for stablecoin businesses. So these capital buffer rules, from an economical and financial standpoint, are quite challenging to implement. So let me stop here, but these are a couple of items that will be hard to work around.
Yeah, perhaps, if I may, to add to these, and fully conscious of the tricky bit in terms of stable coins or e-money, like e-money tokens captured by the e-money directive, as well as MiCA, and the challenge sort of under MiCA, particularly for international stablecoin issuers, and here I'm speaking on behalf of one of our members, Tether, is the circulation limits that they impose on non-euro-backed stablecoins in terms of transaction limits that can be done on a daily basis. I mean, I don't want to bore you with the detail, but just that these potentially can be very challenging if they're sort of defined too closely. The reason why is that if sort of, I mean, stablecoins really serve as the settlement currency, if you like, or the oil, if you like, that really keeps the sort of crypto trading sort of going, because you need stable coins to be able sort of to transact or to transact between different crypto assets. So if you sort of put a limit on it, that can be potentially very dangerous and sort of lead to a liquidity issue. So what is important there is, I think, that on the level 2 sides, you know, how these limits are defined and how these circulation limits are really calculated becomes very important. And also the point that, yes, it is also captured by EMD, so there is a discrepancy there because, I mean, the e-money directive doesn't make any discrimination on sort of the, if money is issued in euro or in a different currency. So why is that sort of the case for stablecoins? Perhaps a question to Peter, although I know that he will blame the council. But that is certainly, I think, one of the challenging aspects, particularly for stablecoin issues.
So if I'm trying to extrapolate from you what you're saying, there is a nexus question here. There is a nexus question on where you have your capital, but there's also a nexus question on what kind of legislation actually bites you the most, even as a global player. So I have to turn to all of you and say, so are we thinking of, if we take the step away from digital assets and think of it as the proxy for blockchain regulation, whether or not Europe took the first step this way, does that then mean that we're looking at, well, is Peter and his gang and the other people around the table, are we really seeing that Europe is trying to do a GDPR or an ESG standard? We're going to set the bar really high. We're going to make granular rules. Because will that step forward with that legal clarity? Is it, again, back to my question, is that something that's worth it? Is it, do we see that principle might echo? Because we've got different voices coming out of Asia, from Hong Kong, from Singapore. We have a lot of noise coming out of the US at the moment. How is that looking? I know we talked about it earlier, but that's a couple of days ago. 2 days is a long time at the moment. How does that look if you look from that side of things, Patrick?
I think luckily we have international developments around the world that will hopefully make sure that those global rules for crypto assets, for stablecoins, will be compatible, and there might be a way to comply with global rules and align the rule books globally. Because otherwise, yeah, I think, I mean, there's no point if every single jurisdictions come up with rules, and those rules at the end of the day, if they are not reconcilable with how other global jurisdictions think around that, I think that would be a massive problem. And since you mentioned GDPR, I think for GDPR, in some regards, it's simpler, because companies will just say, okay, let's adopt the strictest privacy standards globally. GDPR might be the strictest, so let's just adopt GDPR and then we're good. For stablecoin regulations, that's a bit different, because if we take the example of, for example, the 30% of the reserves that have to be held with credit institutions, what if, for example, the US or another jurisdiction says, actually, in light of what happened in the recent months, let's try to minimize that banking risk and that systemic risk. And let's say stablecoin issuers should hold only whatever, maximum 10 or 20% with credit institutions. Then those two frameworks would be in opposition to each other. And that's something that international standard setting bodies like Financial Stability Board, the FATF, the Basel Committee, etc. That's something that they will have to figure out. How can jurisdictions make their own rules while ensuring that those rules are globally reconcilable amongst each other?
So the European Commission is going to say, just write the ones that we did already for Europe?
That's what we always say.
I know.
And, well, there is this thing
But
called...
is it justified for blockchain, Peter? It's a borderless technology that should be applied as much as we possibly could, because it's basically, it is the future thing, right?
Well, yes, the technology and the business is borderless, but the regulation policy is jurisdictional. Now, I often say there is no copyright in MiCA, so if people want to copy it, they can do, and then we'll have international coordination. Whether they will depends. Some people say, well, there's going to be something like the Brussels effect. I don't know whether people are familiar with the Brussels effect, which is the fact that European rules, like, there's a certainty in life, which means that the US innovates, Asia copies, and Europe regulates. That's basically how society is organized. And because we're always first out of the gate when it comes to regulation, these regulations tend to be emulated in other parts of the world, except for the US. And so we'll see that rules start gravitating around MiCA. If other jurisdictions are going to copy MiCA, fine. And if they call us before they do so and they say, can you tell us where the mistakes are, we'll do that.
And you're going to blame the council and the parliament for those, right?
I'm not in a blaming game. I can just say that the offending provisions, and by the way, if any of in the room are, here in the room are looking for true experts on MiCA, they're there, not me. Their postings, what they say, is actually spot on. But in defense of the offending provisions, apart from the capital requirements for stablecoin issuers, which were proposed by the Commission, all the other provisions were not proposed by the Commission, but fortunately or unfortunately, and I'll leave that for all of you to decide, the Commission is not the legislator. It is the Parliament and the Council. The Commission just proposes. We did the best job which we could. It wasn't perfect, but the provisions which are currently, well, what I say is, most of MiCA is very much welcome. People are very positive across the board. The only people who are negative are saying that MiCA is a justification of illegitimate business, we shouldn't do it. But most people are very positive. But there's always, and they are positive about the legal certainty and the framework it provides. But this legal certainty and framework it provides comes at a cost of some, what I would call offending or offensive provisions that certain people don't like because they go to the heart of their business model. And we didn't propose it. That's the way it is. Is it unworkable? We'll need to see. It is the law, and we have to comply with the law, for better or for worse, and we have to stick with it until it gets changed, which will be a long time from now.
Well, will it be a long time from now? Beata, if you could reopen MiCA and do a MiCA 2.0 right now, or rather, what are we going to put in it?
I was actually just about to react on the international point, so maybe I'll just say a word on that before we get to MiCA 2.0 or 2.5. I think what we see on the international scene, so I was looking at all the G20 jurisdictions, and what I find really encouraging is that the vast majority of them, it was like something like 16 or 17 G20 nations, have either started or have announced their intention to create some kind of legislative framework for crypto, which would take like a kind of a bespoke approach, which is very similar to MiCA, right? So of course the devil will be always in the detail, but sort of how you look at this asset, I think whether in the end will be inspired by MiCA or not, at least the fact that these jurisdictions are willing to look at it that way, I think that is really encouraging, right? That doesn't mean that the crypto assets will be completely carved out of the existing financial services landscape. Of course, there's always there's always touch points, but I think yeah, this is an encouraging direction of travel. And Thea, you mentioned the US before, so I think just one thing on the US, it's really not a black and white situation there either. Of course, there's this unwelcome, enforcement and, trying to regulate in this manner. And I don't think that's, I'm very lucky or feeling very lucky that in Europe we don't do that, that we don't put the cart before the horse here. But okay, so that's just really part of the story. I think there are some encouraging signs as well in the US. There has been a new bill that just dropped a few days ago, and it's a start, right? So I think we shall see what happens there. So that was our take on the international part. Now I think I kind of exhausted my time to talk about MiCA 2.5, or maybe I don't want to. So I'll hand the word back to you.
So no wish list from Kraken, that's noted, right, Peter? You have got that in your notes?
Empty page.
We're not going to get away from we can't avoid talking about what's happened. You mentioned the legislation that dropped, but also a lot of other things dropped in the US recently. And I think you mentioned that legal predictability and not from a startup perspective or from any kind of innovative perspective, knowing what you've done wrong after you've done it is not necessarily very good business. What does it look like if you're looking at the US right now? Is there some of the things that happened in the last couple of days, week, that makes you feel that actually Europe is becoming even further attractive, or that other jurisdictions are becoming more attractive? Should we stop talking about the EU and the US, and we can talk about Africa, we can talk about Latin America, we can talk about the Middle East? Maybe we all should, I don't know, catch a flight somewhere else?
I mean, the US, I mean, as Peter said, they do have a slightly different approach. I mean, they innovate first, and sort of Europe always sort of regulates necessarily, and I think in the US sort of it comes at a later stage when the regulator thinks, well, certain practices have not been done, or something was not done sort of in the right manner, that they sort of then intervene and enforce. But they do have a strong enforcement policy. So I mean, it's always been that maybe sort of they're not always sort of strict rules, but then sort of some rules are there, and if they are applied, they're also being enforced. And I think that's what the US is doing. In terms of competitiveness, I still think, the US, I mean, they're still sort of, at this stage, the biggest market, so they do have a head start. I'm not sure the US will sort of really regulate and sort of put a strict regulatory framework around it. They will enforce for bigger companies. But, I mean, in Europe, we always regulate sort of everyone. So, that can also be sort of, from a competitive point of view, not always sure whether that's sort of the right answer. Particularly if we want innovation, and if we want sort of smaller companies to thrive and to actually get the scale, because I mean a lot of it is just scaling business, and it only becomes sort of a real business model if they have the scale.
That's an interesting observation. Patrick, can I ask you the same question that I asked Beata? If you can reopen MiCA, and are we going to take away all the stablecoin provisions? Is that the answer to your troubles?
No, definitely not. Not take them away, but I think to have a clearer distinction between the e-money directive and the crypto asset framework would be helpful. Because as mentioned, now it's like both, and it's a mixing of both that apply to stablecoins, and that might prove to be very challenging in the future. As, for example, payment services rules under the payment service directive apply to e-money, because e-money is a type of fiat funds according to payment service rules in the EU. And so at the one side, you have those payments rules applied to stablecoins, but you have also MiCA rules applied to stablecoins, because they're also crypto assets. And you have all those little intricacies which are very complex. So I would definitely try to create a little bit more clarity and clearer distinction there.
Okay. I dare not ask Peter, but what is the next thing in the blockchain space? We've been talking about NFTs. It doesn't seem to be something that is the biggest appetite for the next blockchain wave, regulation-wise. We've been talking about lending, we've been talking about staking, we've been talking about DeFi. We know, internationally, that the focus has been, also you mentioned some of the international bodies, Beata. IOSCO's been looking at CeFi. We know they're going to come out on DeFi. We see licensing rules in different jurisdictions. Some of the approaches are a little bit different. I'm not asking you to open MiCA, because it would be nice to leave it alone for a little bit, but what's the next piece of blockchain legislation that we're going to see? Is it going to be financial at all, or are we moving away from looking at digital assets at the proxy?
Well, at the European level, I don't think there's going to be anything soon, because we're approaching the end of the mandate. So unless there were to be a major disaster of some sort, which I don't wish, I think everyone who's afraid of regulation, EU regulation, can rest, get good sleep without worrying too much, because there's not much going forward immediately. But those who want regulation are going to have to be patient. The MiCA itself says that we have to report within 18 months from the date of entry into force on NFTs and whether they should be included or not, on decentralized finance, and on lending. Because these were issues that cropped up during the negotiations, but were too unclear and too unsettled to actually address in MiCA in a meaningful way, and DeFi would have been impossible because MiCA deals with intermediaries. It deals with issuers, crypto asset service providers. So how are you going to slot in regulation about non-intermediated activity? It just wouldn't fit. But developments in the blockchain community go very, very fast. In 2017, 2018, all the hype was about ICOs and then initial exchange offerings, and then it was stable coins, and then it was NFTs, and now it's DeFi and lending and staking. I have no idea at all whether these issues are still going to be big issues in 18 months' time when we come up with this report. Maybe in 18 months' time, there is no NFT space anymore, and so there's nothing to write about. Maybe the NFT space will become ginormous and we can't ignore it. Say with DeFi, maybe it just sort of disappears, maybe it becomes very big, or maybe some other issue comes up. But the Commission always does what it's told, so we will do a report, and we almost always kind of meet the deadline, but usually we don't. So it'll be
give and take a couple of years.
Well, not a couple of years, but say a few months. So don't call me and say, well, the 18 months are over, where's the report? It'll be around that time. We don't like being pinned down on months. We prefer to say that we'll do it before the summer of because Brussels, you never know when the summer is. So that's more useful for us. But so we will do a report. We will address these three issues because the legislator asked us. But of course, we are constantly looking into it, engaging with the community, and if other issues come up, we will address those issues as well. Plus, we will try to pinpoint at weaknesses, potential mistakes that are in MiCA, and that will only show through the implementation or through the level 2 process that we say, well, this really doesn't work quite well, and we can revisit them then. Of course, for the Commission to do a new proposal, we have to do consultations, impact assessments, so that is going to take a little while in the new Commission. The next Commission normally takes office around November of 2024. They're not going to propose a MiCA 2 in the first week of their mandate, so a couple of months in the mandate would be the first opportunity. So we're talking at the earliest 2 years from now for a proposal. Assuming that the new Commission wants to do a proposal, I have no idea. Maybe at that stage we have a political boss who says, I don't want to do anything on crypto, and then we won't do anything. But 2 years from now is the earliest possibility. What it will cover, we'll see. But I'm pretty certain that if in 2 years' time we do propose something, it'll take about 2 years to get that through Council and Parliament as well. So any update, extension of MiCA will take about 4 years from now.
So, you know, the silver anniversary of MiCA 1 will have had a couple of iterations of it. Silver anniversary is 25 years, right? The world will look very different for sure. I think we have 1 minute left. So conclusion is the European Commission responds to supply and demand just like everybody else. So if we demand more legislation, we will get it. We can demand that by crisis. We can demand that by interaction. But I'm also hearing that you're very open to getting wish lists. I think I also take that there are definitely things where the European predictability is a positive, both for a CASP and for a stable coin. And I'm also hearing some interesting thoughts about actually, I think maybe the next conversation we are going to have on European competitiveness of blockchain legislation might not be the financial space, but might be something about zero knowledge proof. With that, I'm going to thank all of you very much for your time. It's been a pleasure. I hope you're not all as sweaty as we are up here because the light had a little bit extra. Drink water, and I hope you all have a fantastic rest of the conference. Thank you very much.